This is the monthly chart on Carvana, and the stock is up more than 1,000% year to date. However, in recent months, price has run into what I deem are sellers. Some may say resistance. Now, I did make several videos in Carvana's up move over the course of the year. I missed out on this pullback to a weekly buyer's level at $7. And so, yes, I missed out on the 1,000% move. However, the question is, with prices hovering around $55, is it time to sell if you were in sub $10? Before we continue with the analysis, let's look at this article. And it is coming from Market Beat. Carvana, cash out or hold tight. So now if you're wondering whether or not the company's earnings were the cause of its impressive share performance, you might be surprised. While the company previously reported substantial earnings beat, another factor that might have equally resulted in the stock surge is short interest. And we see that in multiple stocks. Just recently, MicroStrategy and Marathon Digital, both the highest, or one of the highest, shortest stocks on the equity indexes, have surged higher because the short interest is 30% plus. Carvana surged by as much as 12% following its latest earnings release in November, as it unexpectedly reported an adjusted profit despite a decrease in the number of units sold year over year. And they have forecasted making profits early this year, that they were on target. Carvana's strategic shift toward profitability, marked by layoffs and cost-cutting measures last year, contrasts its previous growth trajectory during the pandemic. Company, which faced bankruptcy speculation in December of 2022, with shares hitting a 52-week low of $3.55, now appears to be navigating challenges while focusing on achieving financial stability amid evolving market conditions and uncertainty. The stock's relentless and remarkable surge higher has not scared off the short sellers, as short interest remains exceptionally high at roughly 39%, according to the NYSE. Short interest of that scale makes the stock one of the most heavily shorted names on the stock market. On top of the bullish sentiment expressed by the magnitude of short interest, analysts also remain bearish on the stock. Based on 13 analyst ratings, the stock has a reduced rating and price target of $37, forecasting almost a 32% decline. All right, going back to the charts, and let's start with we're going to go right to the daily chart, 'cause that's where all the action is happening. And we want to look at these daily sellers, how they were formed. Again, they were formed back in 2022. You have a drop, a basic candle drop, basic candles drop. So this is a level on level. As you can see, price worked back in August of last year, worked again on the gap higher on earnings in July, worked again in September. Now, this level is no longer valid, as all the remaining unfilled sell orders have been filled. So I will take this off the chart. And in the process, we formed a daily buyer's level at $50. So what's the next move? The chart suggests price will pull back to that $50 level and then move to the next level of liquidity. And that's going to be at the Daily sellers level at $66. So, should you sell or hold tight? Depends on your risk tolerance, financial objectives, and time horizon. I do want to mark this level as well, down at 40, in case price breaches and closes below the $50 level. Look for another level to go long, down at the $39 level. Thanks for watching. Subscribe. Please like the video.